Welcome to the stock analysis of SeQuent Scientific Limited. Today, we're diving deep into this leading player in the Indian animal healthcare industry. We'll cover its industry outlook, business segments, financials, management and growth outlook, recent merger and key strengths and weaknesses. Click on the info button to check out other analyses of stocks of the pharma industry. Let's get started. Before we begin, a quick introduction to PA Wealth. We're an investment services group offering stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Now, let's start with an overview of SeQuent Scientific. SeQuent Scientific is India's largest animal health company and ranks in the global top 20, with sales of 13.69 billion rupees and a market cap of 29.33 billion rupees. Operating in over 90 countries across 5 continents, SeQuent has 7 production facilities in India, Spain, Brazil, and Turkey, most of which are certified by major regulators like US FDA and EU GMP. Under its brand Alivera Animal Health, SeQuent provides animal health API, formulations, and analytical services, serving cattle, poultry, and pets. The company also offers laboratory and technical support, addressing critical needs in the animal health sector. Recently, SeQuent Scientific and Viyash Life Sciences announced a merger on September 27, 2024, to create a stronger platform in animal health and pharmaceuticals. Now, let's take a quick look at the animal healthcare industry. The global animal healthcare industry is valued at $38 billion in 2023 and is projected to reach $51 billion by 2027. In India, the market stands at $1.25 billion in 2024 and could grow to $1.89 billion by 2029. Globally, the sector grows at 8% CAGR, with India's growth slightly higher at 8.63%. Companion animal healthcare is rising faster at 9.03%, driven by increased pet ownership. Key trends include disease prevention, tech innovations like apps, and government support, with North America leading and Asia Pacific growing the fastest. Let's break down the business segments of the company. First, formulations. This segment drives much of SeQuent's sales, especially in regulated markets like Europe and emerging markets like India. Key products include solutions for pain management, parasite control, antibiotics, and gut health. This segment grew in Europe and Turkey, with expansions into Latin America and product repositioning in new markets. Second, active pharmaceutical ingredients. SeQuent's API segment supplies global animal health companies. Efficiency initiatives, notably Project Pragati, have improved profits and performance. About 2/3 of API sales come from regulated markets, with recent certifications, such as WHO pre-qualification, unlocking new business avenues, particularly in companion animal health. Third, analytical services. Through its subsidiary, SeQuent Research Limited, SeQuent offers contract research and analytics from a US FDA-approved lab in Mangaluru. This segment provides specialized testing, including trace elements and genotoxic analysis, and supports R&D with a team of around 39 scientists. Now, let's discuss the growth strategy of SeQuent Scientific. SeQuent Scientific's growth strategy spans 3 key phases. SeQuent 1, Building Blocks. This phase focused on establishing a global presence through mergers and acquisitions, expanding into new markets with various business approaches. SeQuent 2, Sharpening Focus. SeQuent concentrated on operational efficiency, targeting regulated markets, and strengthening partnerships with global clients. This included streamlining acquisitions and enhancing its management team. SeQuent 3, Differentiating as a global leader. Moving forward, SeQuent aims to become a unique global player, focusing on integration, R&D, and partnerships to lead in the animal health sector. Let's now break down the company's revenue segments for Q1 FY25. The formulations segment is the largest contributor, making up 75.67% of the total revenue. Active pharmaceutical ingredients account for 23.29%. Lastly, other income contributes 1.03%. Now, geography-wise revenue in the financial year 2024. Europe is the largest contributor to SeQuent's revenue, making up 41.73% of the total revenue. Asia contributes 24.10% to the total revenue. Lastly, the rest of the world contributes 34.17%. Now, let's look at the management of SeQuent Scientific. Mr. Rajaram Narayanan is the managing director at SeQuent Scientific. With over 25 years of experience, he previously served as MD at Sanofi India, leading strategic changes. He has held senior roles at Airtel and Hindustan Unilever. He holds an engineering degree from BITS Pilani, an MBA from IIFT, and completed Harvard's Advanced Management Program. Mr. Ved Prakash Raget is an executive director at SeQuent Scientific. A chemical engineer with 29 years in manufacturing and project management, previously VP of Operations at Oliveira, with experience at Solara, Granules India, and Dr. Reddy's. Dr. Kamal Sharma is the chairman and independent director. He is a veteran with over 48 years of experience. He was MD at Lupin and drove its global growth. He holds degrees in chemical engineering, industrial management, and a PhD in economics, with further training from Harvard. Let's now look at the shareholding pattern of SeQuent Scientific as of September 2024. Promoters hold the majority share with 52.76%. Mutual funds hold 7.41%. Foreign institutional investors hold 6.45%. Employee Benefit Trust holds 0.17%. Other institutions collectively hold 2.58%. Public shareholders own 30.63% of the company. Now, let's delve into SeQuent Scientific's cost structure as a percentage of net sales for FY24. The largest costs are raw material expenses and employee costs, accounting for 57.62% and 18.29% of net sales, respectively. Let's now review SeQuent Scientific's financial performance over the years. Net sales have shown robust growth, increasing from 443.22 crore rupees in FY15 to 1,369.73 crore rupees in FY24, reflecting a CAGR of 11.94%. Profit after tax for the financial year 2024 is negative 29.62 crores. Let's now turn to the management commentaries to get a better understanding of the company's performance. The SeQuent and Viyash merger will likely be completed within 12 to 15 months. SeQuent forecasts that by 2027 or 2028, the merged firm will reach roughly 4,000 crores in revenue with a 20% EBITDA margin, leveraging development in animal health, new products, and possible entry into the US market. While no immediate plans were confirmed, the management showed an interest in researching the US market for animal formulations. The company anticipates possible growth prospects from the US Biosecurity Act, which, if implemented, might incentivize sourcing outside of China. The merged firm intends to establish itself as a credible alternative for US pharmaceutical needs, particularly in regulated sectors. Approximately 67% of overall sales come from regulated markets, which are usually more stable and have greater margins. Revenue in Europe climbed by 9.5% year-on-year in constant currency, rising to 28% after accounting for operational shutdowns in Germany and Spain. SeQuent's Project Pragati effort resulted in considerable cost savings and operational improvements, which boosted overall profits. SeQuent optimized its operations in Mexico and other Latin American countries by outsourcing non-core tasks such as logistics and accounting. This cut operational costs, increased efficiency, and improved overall profitability, particularly in Mexico and Brazil. The phased shutdown of the Bremer Pharma facility in Germany between July and December 2023 significantly improved cash flow and reduced operational costs. By relocating production from Germany to Turkey, SeQuent has optimized its asset utilization and achieved better cost efficiency, with commercial operations in Turkey expected to resume by FY26. Cost-cutting and operational efficiency initiatives in Latin America and Turkey contributed to consistent EBITDA margins, which helped to offset economic headwinds. Synergies from pooled resources are expected to save on procurement and operating expenses, with anticipated increases of 100 to 250 basis points in EBITDA margins over the next 3 years. Now, let's talk about SeQuent's merger with Viyash Life Sciences. The merger resulted in a combined organization with a 5 times greater manufacturing capacity, a 6 times larger R&D team, 10 times more US FDA-approved facilities, and an 8 times higher potential for new product submissions. Viyash has over 200 R&D scientists, over 175 patents, and 9 US FDA-approved plants, reinforcing its strong focus on intellectual property and innovation. Viyash has a large R&D pipeline with roughly 60 commercial products and approximately 30 new drug applications including high-end active pharmaceutical ingredients and complicated formulations. The amalgamated firm will focus on expanding these offerings. Viyash's experience in human pharmaceuticals complements SeQuent's portfolio by linking the needs for animal health and human pharma R&D, especially as the pet care market grows. Financial synergy involves operational cost reduction through integrated procurement and manufacturing resources, with expected EBITDA margin improvements by 2027 or 2028. Now, let's discuss the strengths and weaknesses of the company. First, strengths. Diversified revenue mix. SeQuent has diversified revenue streams across geographies and products. It generated the majority of the revenue from the formulations business and the balance from the API business. Of the total formulation sales, the regulated markets of Europe, Latin America, Turkey, emerging markets and India. Now, weaknesses. Exposure to regulatory actions. SeQuent remains exposed to regulatory risks, as it derives nearly 50% of its revenue from the regulated markets. Any adverse impact due to regulatory actions can result in increased risks for the company. And that wraps up today's analysis. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a topic you want us to cover? Drop it in the comments below. Thanks for watching, and we'll see you in the next video.